Hi, hello everyone. I am Sannagunda Pavi. I studying MBA at Sri Venkateswara College of Engineering. Today we discuss about accounting cycle. There are 10 steps of accounting cycle is here. First one is identification of transaction. Second one is journalizing. Third one is posting to ledger. Fourth one is preparation of trial balance. Fifth one is adjusting entry. Sixth one is adjusted trial balance. Seventh one is preparation of financial statement. Eighth one is closing entry. Ninth one is post closing trial balance. Tenth one is reversing entry. Accounting cycle. According to the going concern concept, it is expected that business will continue on forever. The accounting process starts through the identification of transactions and ends with the preparing financial statements. These processes are rotated continuously in every accounting period. So it is said that accounting cycle is the continuous process of recording and processing all transaction of an organization. Identification of transaction. The first step of the accounting cycle is identification of transactions. Transactions are identified after analyzing all events. The only financial transaction would be considered a transaction. The transaction may include the purchase of goods, sales of goods, any operating expenses, any payment, etc. Second one is journalizing. The second step of the accounting cycle is journalizing. Here, analyzed transactions are recorded in the primary book of accounts as debit and credit book of accounts as debit and credit in chronological order. Purchase book, sales book, purchase return book, sales return book, note receivable book, note payable book are the primary book of transaction recording. Third one is posting to ledger. The third step of the accounting cycle is posting to ledger. Ledger is the main book of accounts. Here transactions are transferred into the ledger as a separate head of accounts. Different ledger is prepared for each head of accounts such as purchase account, sales account, salary account, advertisement account, capital account, building account, etc. Fourth one is preparation of trial balance. The fourth step of the accounting cycle is the preparation of the trial balance. It is prepared to testify the mathematical accuracy of the recorded transactions. The trial balance is prepared with the concerned accounts head along with the debit and credit balances of the ledger. It is prepared at a certain time period. Fifth one is adjusting entry. The fifth step of the accounting cycle is a adjusting entry. The journal entry which is given for adjusting accrued and prepared income and expenses to identify the actual financial condition of a business of a particular accounting period is called adjusting entries, such as adjusting entries for accrued salaries, prepared insurance premium, unrealized income and expenses, etc. Sixth one is adjusted trial balance. The sixth step of the accounting cycle is the preparation of the adjusted trial balance. Here again, the adjusted transaction is transferred to ledger as a separate head of accounts. Then the adjusted trial balance is prepared with the balances of debit and credit of ledger. Seventh one is preparation of financial statements. The seventh step of the accounting cycle is the preparation of financial statements. The financial statement is prepared to identify the profit and loss, assets, liabilities and owner's equity of a business at the end of the accounting period. Eighth one is closing entry. The eighth step of the accounting cycle is a closing entry. There are two types of accounts in the business. One is income and expenses related account. Another one is asset and liability related accounts. The necessity of income and expenditure related accounts are finished in the accounting period. So closing entries are given to close the balance of revenues, expenses and drawings account at the end of the year. Ninth one is post closing trial balance. The ninth step of the accounting cycle is the Preparation of the post-closing trial balance. After closing entries, ledger balance of income and expenses become zero. The next accounting period will start with the remaining balance of asset, liability and owner's equity account. Post-closing trial balance is prepared with these assets, liabilities and owner's equity of balances of ledger. Finally, 10th one, reversing entry. The 10th and final step of the accounting cycle are reversing entry. Reversing entry is the opposite of the adjusting entry made in the last accounting period. Adjusting entries are made at the beginning of the next accounting period. Thanks for watching.